So no one in the country does CFO, fractional, executive services with lending. It's not heard of. And the reason why, again, is because my company right now is break even, not profiting because of the CFOs and the CMOs that I have to pay who are not making me as much as what the lending is, because on the lending, I'm not putting these 10, 12 points in. I'm making deals with the bank where if I hit a certain amount of loan volume, they pay me out more percentages on everybody, but all my clients get the buy rate of what I got the money for. So I don't have to actually increase my buy rates. I'll send you a screenshot to the customer of the offer email that I got from the bank if they wanted to prove that I'm not upselling. So Devin Gambino, I'm the CEO and founder of Lendefied. And what we do is we are a fractional executive services company that you're getting a fractional CFO, fractional CMO, CTO with the lending. So if your business is falling short in something that you're not good at, people open businesses in things that they're good at. And then they end up doing things in the business that they're not very good at, but they're forced to do. And so what we do is we step in, provide the lending, and then help support the things that you might not be so good at, and sometimes might even be needing the lending to help accomplish. That's what we do.
Have you ever heard of a PEO?
Yeah.
So I had never heard of it, but I actually just had a guest on it for a PEO. And it sounds actually very similar to the concept of a PEO, obviously different industry because they're offering services like that you wouldn't necessarily get as a small business, like the HR and the insurances and stuff. But it sounds very similar where it's like things you can't know or you wouldn't do well on your own or be disadvantaged on your own and you can do through you guys.
Right. So we won't run your payroll. That's the thing. So like we won't run your payroll. We won't pay your debts for you, right? As far as your credit card balances. We won't pay out your ownership compensation schedule and your benefits. But what we will do is we'll set you up with things like Ramp by Visa that allow you to get a line of credit for 30, 60 days at 0% interest, and you run your expenses through Ramp. Now you've got all your expenses in one place. You give all your employees an expense card, and now they're running through Ramp. So there's no more, here's a picture of the receipt. 4 weeks later, it's all crumpled up and you can't read it. It helps to avoid tax issues. What I'm finding is business owners are not taking advantage of the tax codes. They're not using, for example, the R&D tax credit is a phenomenal program. The business owners can go back 5 years retroactively. And I have a steel company out here in Long Island, steel manufacturing business that's getting $700,000 in R&D, backed R&D. And that's a tax credit that business owners, I would say 80% of Americans, not taking. But everyone knows about the PPP and the ERC. This was formed, the R&D tax credit was formed because they ended the ERC early, right? So this is something a CFO would know. But a lot of small business owners can't afford a CFO. So they end up calling somebody on the phone to get money. And what I found is if you're calling somebody on the phone that you don't know to borrow money, you probably don't have a CFO because he would be telling you not to do that, right? But we give you the money, and then for the 3 months after you're funded, you're getting a CFO to step in and make sure that the money's being allocated the way it should be. And then we will tell you if you're looking to do a marketing campaign, you want to buy domains, you don't buy them on GoDaddy, right? You buy them on Namecheap, right? And you set up the domain there because it's so much more affordable, and they'll host it wherever, and then you can do Mailgun instead of MailChimp. It's better deliverability. We've gone through the trials and tribulations of a lot of things that the business owners will have to go through as they grow, and they're going to spend money in the wrong places. We will help avoid those as you go, as a CFO should or a CMO should.
So it's interesting because I'm surprised more of this isn't out there, and if I'm wrong, forgive me, because this is the first time hearing of some similar of services like this. But what I find interesting is it actually sounds like a win-win. A win for the business because they're getting these services that they wouldn't have otherwise and helping them allocate the funds that they're getting well, but also a win for the lending company because that means that money will be used well and the business won't go under and you lose your money.
Exactly.
So I don't understand why that's not common practice, actually.
Well, because it's an unnecessary expense for the business model that I'm in. Right? Think of all the companies out there that do business lending. If anyone ever has called you to offer you money over the phone, I'm sure you've gotten a ton of phone calls. Those people that are calling you, if you took a loan from them and you never took another one, what happens to their business model?
They want reoccurring customers, I'm assuming.
But you have to have renewals,
right?
Yeah,
sure.
And that's why the terms are 12, 18 months. So you have to come back every 6 or 9 months to get more money. So it keeps their business model flowing. if they don't want to do 5 or 10 year loans because then you're not going to be back as frequently. So shorter term, higher interest loans are what people push. What I'm finding is there's a in between, there's a reason that people only qualify for those, and it's because they're using their personal credit to open the business, and then their credit cards are overutilized. So now their credit can't go above 660 because their credit cards are overused. And now they're forced to go to these banks. But if they would have not used personal credit cards or used an SBA startup loan instead, it would have not taken that path. So it's the starting off using personal credit that I find ends up with people having to go and look for a merchant cash advance or a shorter term, more expensive finance. And with my business model, if you borrowed once and never borrowed again, I'm good because at the 4 month mark, it costs $4.95 a month to keep me on for 4 to 7 hours a month of time dedication. That's really all a small business needs from a CFO. It's just that there's no, you can get somebody fractionally to come in, but they want usually 20 hours, 15 hours for it to be worth it to that person. We're okay with 4 to 7 because there's 100 people that are, in our business model that do that. So we can make $500,000 a year as a firm at $4.95 a month. There's just 100 people, which is less than 10 a month, less than 10 a month, around 8 a month. So the business model works, but it's not profitable up front. And so a lot of people are like, so why offer it? If it's not profitable up front, I'll offer it after I've done this for 2 years, built my book, and then I'll offer it. Well, at that point, all the clients that didn't get it for the first 2 years when you were ramping up are feeling like, well, I didn't get it when I've been with you 2 years, and now you're offering it to people that have not even been with you that long. So I said, well, I'm going to have to bite the bullet. And when I rebranded Lendefied, like I did in 2024, when we started offering this, before Kevin Harrington came on, that was what allowed us to get Kevin Harrington. So doing the fractional CFO services and everything else that we do, even though it's not common in the industry, the reason it's not common is because it's an unnecessary expense. Plenty of brokers and companies out there make a lot of money without needing to do this. So why do it? And by doing this, it mitigates the borrower needing to come back as often because they have financial guidance. So why would they offer? It's like somebody who's a personal trainer offering a pill that gets them to be muscular in 2 weeks. They're not going to give you that because then you stop coming to the gym. So that's probably the best way to put it.
See, it's funny because I would almost, I don't know, I almost disagree to some degree in the sense that, like, I actually think that most businesses, I agree with what you're saying, that most businesses think the way you're just thinking. Why would I give away that magic pill? But I found through talking to so many businesses, and you're actual proof of that, that when you give that magic pill away, business just goes well for, not necessarily well, like you're not a millionaire, but like just giving to the client and without, over, not, I want to say over giving, but just giving, I think it's the biblical principle of giving you shall receive, right? And it's so interesting when you're living with open hands, you can't receive anything if you have closed hands, right? So it's if you're living with open hands given to the clients, and you have the opportunity to receive something as well. So it's interesting, just like it's kind of that same concept, like why would a dentist, which I also find funny, just on a funny little tangent, like all the dentists recommend you brush your teeth. Well, why would they recommend it if you're not gonna need them anymore? But it's just a strange little tangent I've always wondered.
Yeah, yeah, yeah.
But point being though, it's like the more you give to the client, I do well now because I took a loan from you and now I have the financial guidance. I'm going to tell 100 people. And it's this, I've had this conversation many times on this podcast where it's like people undervalue tremendously the opportunity of doing good by another business. You go into a restaurant, you have a bad, something happens, they forget a drink or they mess up your order, whatever, it takes forever to get seated. That's a really great opportunity to get a really, really good review. Turn a bad review around because now you have the opportunity to really change the perspective. Oh my gosh, they took off three rounds of drinks. Like that's crazy. And how much does that cost the business? Really not that much. But how many people will they tell that'll bring in thousands of dollars to business later?
Right, right.
It's that same concept.
It's similar, but the difference with this business is the people are so expensive, right? I can't just hire a 19-year-old kid out of college to dial the phone and say, "Hi, you interested in borrowing capital?" and then hang up like that. I can't do that. I have to hire people that have been executives at big companies and know how to run a balance sheet and read a tax return and run EBITDA. So a lot more expensive to staff my business than a lot of these brokers that are calling people on a daily basis. So, uh, yes, the comparable is correct, but on a
Sure,
much
of
wider
course.
range. Yeah,
But I'm just saying in the aspect of like I think so many businesses just think so small. Like what
yeah.
how
Oh
can I
yeah,
just get the
100%.
bang for the buck and then stop there
Hmm.
and not actually like what's the long term? How will this benefit me long term and how can I benefit the customer long term and how that will affect my business when I do well by customers.
Right. No, 100%, 100%. And it helps too that the customers, and people don't think of this, but the customer is going to borrow money for equipment, right? And then the equipment is going to need somebody to run it. They're going to have to hire somebody. They're going to need a bigger warehouse to put all this more additional equipment inside of. And so now you're in a position where they're going to call you again and need to get a loan for the real estate, but they're going to want to lease it. You find out that they're wanting to lease it as their CFO. You say, no, 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 no. Let me find land that you can bid on, and let's put a steel frame structure there for $80,000 so that you're not making a monthly payment on a lease that you don't keep. You keep the property. A lot of business owners don't think wide. They think, all right, I need this to do this. Yes, but if you do this to do this, and you frame it in this structure, now you're going to have to tear that down to put something else there in the future. Build something bigger that you can build inside
Mm,
of. Don't build something small that you have to build on.
yeah.
You follow?
So tell me a little bit more about the actual business structure of like first of all how you got into this industry because it's rather unique and then what is are you actively cold calling or how are you getting business? Tell me those are two different questions, but
Yeah, no, no, you're good because they feed into each other, right? So when I started in this business, I was in real estate, and in real estate, when you work in commercial real estate, the amount of wealth that you see in Manhattan, for example, right? You notice who's surrounding the wealthy people. I notice they're always surrounded by a CFO, right? A CMO, or somebody that's helping them make these big decisions. And I realized the small business owner that's in the cafe that we're going to go look at them buying the building, right? They don't have anybody. They're their own CFO. It blew my mind. I'm like, how does the guy that just owns a building, right? How much CFO work do you really need to own a building? Probably a lot less than would actually is needed for the daily inside, right? Because there's so much more expenses. There's so much more going on. There's more chance of theft, right? There's so much more that needs to be watched. So I was in that industry for 8 months, and I realized I need to go where the market's going to be, which is small business owners need support in areas that they're not good in. So I went over to a company that was purchased by a very large company that is shall not be named, but you can find out pretty easily my LinkedIn who they were, and there were 10 employees there, and it was a situation where that firm was exactly what I am, but they didn't call it a CFO service. They didn't call it a C-suite. They just said, "We'll be your guys. Anytime you need money, you call us." I figured that was such a good business model. But what ended up happening is it went from it mattered about the customer experience, and when you needed more funds or whatever it is, you would call me. They decided, well, it's really expensive for a New York based location to be getting that subsequent funding after that first file funds. Why don't we house the renewal department in another state like Utah where it's more affordable? And now the customer experience drops off, but they're able to hire more people. And I realized after, 3 years of watching customers kind of like come back for one loan and then they'd be like, yeah, Devin, I'm sorry, I can't reach you because you're telling me I can't talk to you. And you keep transferring me to somebody else. It's like, yeah, I'm going to do this the right way. I'm going to open a company that whoever worked the file up front can continue to work that file for the lifetime that you're here. And if there's a reason that you're no longer going to be with us, like I've never had a representative from an executive level start here and then leave. So it puts the CFO and the CMO and the CTO in a very high regard at my company, which is why they're expensive. Like I was saying earlier, they're expensive to keep. But by doing so, it makes the marketing efforts you were asking about much easier because I'm able to market myself as executive services. I'm able to market myself as in tax season to help filing. I'm able to advertise in a different way than my competitors can. So that there's a benefit to that. But what led me away from that business is when you're dealing with expensive money, the money is given to the broker typically at what's called a buy rate, which is basically like a 120 or 130, and then you tack on as much as 10, 12 points on that number. And then that's what the customer is going to pay. You imagine the broker has control at 30% of the cost of your money.
Mm.
Sounds crazy,
Yeah.
but that's exactly how it worked. And I was penalized as a representative underneath, right, for doing loans with 1, 2, 3 points in the loan, not charging 10 to 12. And so that was another reason why that business, right, and all the people listening to this are going to, or watching this, are going to be able to relate, like, oh gosh, I get so many phone calls all the time from people trying to offer me money. All those people trying to offer you money are trying to give you money that is not long-term sustainable, like I talked about earlier, and they're trying to put you in a position where all you need is bank statements. It's, you don't need tax returns. But you don't have to worry about how your tax returns look, because then you would need a CFO or somebody with a head on their shoulders to get those, and then they might tell you this is crazy, right? So there's it started to become in my head like I wasn't helping small business, and so that's a reason that is an industry that I'm still in, but I'm trying to take that industry and show everybody there's a way to still make money and help the client. If you give them a good loan, all that's going to happen is more opportunity is going to open up for them. They're going to want to buy the building they're in. They're going to want to buy another piece of equipment. They're not going to stop borrowing. They're going to just borrow a different type of product. And if the nation of people that do what I do in like brokering loans would just start teaching their people how to do equipment financing, how to do SBA loans, they wouldn't feel the need to push these other products so much. And I understand the sales cycle on them is really quick. You could fund a loan in a day or two, but an equipment loan takes 5, 6 days. And now the guy can have a loan over 5 years with 11% instead of 30% over 2 years. Right? And it just takes a little extra work, and the client's going to be so much happier. They're going to want to send people to you, like you said. And at the end of the year, when they're accountant, I've had accountants call me and say, Devin, you told my client to use Section 179, and just wanted to thank you for that, because every year I tell him, can we use this? And he says, no, I want to do the 5-year thing my old accountant did. And I never could explain him out of it. And like sometimes the accountants end up setting the business, which I think is an interesting thing.
So do more people come through your door from a lending side or for the like the C-suite side?
I compare it to like a construction company offers handyman services to get people to call them when they want to redo their kitchen or their bathroom. Because who are you going to call to quote your bathroom job? Probably the guy that you have a handyman come and do the stuff around the house. We offer lending because it has people want to call us to do all the other stuff that we offer. It's just
Which
people
is
need
which in that
lending.
analogy?
Like
The
people,
the handyman is the lending, or
handyman is the lending.
I see. Interesting. So the lending is getting people in the door.
Lending people gets people in the door.
Interesting.
Right. And then we find out their business credit has wrong, misleading information. The address is mismatched. They don't have an Experian BIN number assigned. So we find where they're not doing things well because they're coming for lending. I ask for their tax returns and their bank statements and their profit loss balance sheets. I look at all of this, and if it doesn't look good, I'll tell them what they have to do to fix it, or they'll tell me, Devin, can you just fix it, is usually the answer.
Yeah. Can you give me, you gave a brief one before, but I'd like a slightly more expanded version of it. You mentioned the R&D, the tax credit essentially, or the loan.
There are a couple of programs that business owners just don't use. One
Yeah,
of them
so that's my
I've found
question.
most is the R&D.
So can you briefly go over a couple that people, obviously the benefit of this is that people can then see, like they can call you and hear a further explanation, but to get people interested and kind of get their eyes open to some things that they may be missing out on, can you give a brief like description of a couple of these opportunities that business owners are missing and what they are?
Some things that I think business owners are missing out on are things like the R&D tax credit, which specifically allows people like my company that does steel manufacturing here on the island. He buys equipment that allows his workers to be more efficient running it on this machine versus the old one. So if that equipment allows you to do things better, more effectively than the equipment you had before, that equipment and the payroll costs for the people that are on that equipment is an R&D expense for the first 3, 6, 12 months after you got it. I have people that test different types of software, building out different types of software. And it's trial and error when you're building software. The entire building process is an R&D credit. including when you're done, and the errors along the way. People think they can only write it off when it's finished. You can write it off when you're messing up too. There are other credits that people are missing, but they're more. There aren't as many tax credits as people are missing as there are 0% things that people are missing.
Like what?
0% through products like Ramp and Divvy. U.S. Bank has credit lines that are not on the personal FICO. They're just on the business. PNC as well. Key Bank. And I think a lot of these are banks that might not be in your state. Like Georgia's a tough one because a lot of these banks aren't in Georgia. But when you have an example would be like Cadence Bank out of Texas does SBA loans. Why not go to Cadence Bank in Texas, get 350 or 200? I'll give you actually a real life example. A client borrowed $350,000, set aside $36,000 to cover his first year of payments. The other $314,000 went into the business. He used the money for the entire first year without having any payments affect his cash flow. Then the profit from using that
Wow.
money covered all his payments year two. But what was amazing is Ramp by Visa approves people 17 to 33% of the funds in your account on a line of credit at 0% over 30-day net terms.
I don't think many business owners are even familiar with Ramp. So can you actually break this down a little bit further and like more like
Yeah, of
on
course.
just even kind of like what you're saying? I think that most business owners are very good at what they do, but they don't even totally understand the financial side of it. So even break it down even further. So like even like the 38 you were just talking about, like just break it down super simple for the business owner that may not totally get any
Yes,
of this. This is,
yeah.
hey, accountant,
So,
here's all my stuff. I don't know what's going on. So,
yeah,
super
so
simple for them.
if somebody were to qualify for a $100,000 loan and they can't get a line of credit, what they'll do is they'll use the whole thing because they feel like I don't want this money to sit in my account not being used. I'm not making money on it if it's in my account. Correct. But then the payments are coming out of money that was not generated with this money. It's coming out of money that was here before. You only want the payment of money that you're getting to affect the cash flow post benefit of using those funds. So money gets put to work, profit comes in. But what about the period between the profit? That's where you should put some of the bank's money in to cover their payment so that the business owner's cash flow is not absorbing any of the loss of getting the money until there's a positive on the business owners.
That's such an interesting concept. I've never heard that before. And I think that so many business owners do the opposite. And that's why they need a CFO.
Exactly.
That's so interesting. Can you talk about another 0% thing that you mentioned a couple of those things? So
Yeah, so Ramp as a continued example, if you get that 0% over 30 days, some business owners might think, well, my net terms are 60. That doesn't work for me. Well, it still does, because if you have 100,000 in the bank and now you've got a $25,000 line of credit here, well, if you only needed 17,000 for inventory, take 17. Now you have another, call it what, $8,000 in there. At the end of the month, if you only had $8,000 to pay back, you couldn't pay back the full 16. Take the 8 out that's still in there. Take the 8 that you have. Now you got 16. Pay that back at the last day of the month. Now you just roll to yourself another 30 days, right? As long as you only use half of what's in there, the other half is always available to draw out the last second and effectively pay itself back. Right? Now you've got an endless cycle. Eventually you'll have to stop.
yeah,
So if I gave you $100 and you had to pay me back $50, you had to pay me back that $100 at the end of the month. By taking out $100 on day one, you guarantee that you owe me $100 in 29 days. And you need to find a way to get it. But if you only took 50, then that line of credit is still there with 50 on it. So at the end of the 29 days, I say, give me back my 50. You go, I don't have it. You don't have to know I don't have it. Take the 50 that's still there, give that back to me. There we go, it's back. And now I bought myself another 30 days.
that's crazy. That's so interesting. And you're saying that a lot of business owners take the full amount because they think it's a waste not to take it, or they
No,
just
well, what happens is they just realize 17%, think about 17% of the money in your account. Business owners aren't keeping $100,000 in the bank because of what I was just saying. But if you had, and business owners know this, it's when you have $1 million, it's easy to make money. But how do you get there? By smart financial decisions along the way. No millionaire out there is going to say, I made one smart financial decision and everything was great. It's smart financial, it's like dominoes. You need lots of them set up to have a cool design at the end. No one's going to look at a domino that fell that's huge and say, wow, that looks great. They're going to say, yeah, you got lucky. Like, one big domino. That happens once in a blue. But a lot of smart financial decisions are what you need to mount up to get to, that amount of money in the bank. So you need to keep $100,000 in the bank. That ramp will give you 20, 25. Now you use that more effectively than if you had 30,000 in the bank and ramp only gave you 5,000. Yeah, but how do I keep 100,000 in the bank? By borrowing money. It's okay to borrow money if it's the right product. Because if it's the right product, you can take
When
some
you
of the
say
bank's
product, what does
money.
that mean? Product as in like a product
Like a product, like if you're
of
going to
loan
buy
or
a
like
piece of equipment and your only means of purchasing it is a 12-month loan from some person over the phone, you're told by that person, well, if you take this money and buy that equipment, the equipment's going to make you money. It is, but it's going to make you literally just enough to cover those payments to them. So now for the next 12 months, you're not making profit. So there's no reinvestment to make. So what was the point of getting this equipment? That's the thing that I'm finding is the business owners aren't borrowing enough to cover the payments, and so that the profit can cover payments thereafter, and they can make money with the money without affecting the business isn't running itself.
So how does the business owner, what does the business owner need to do to get more funding to cover the payments?
It's a big thing that business owners think they have to file this giant, if I want to borrow a good SBA loan, for example, I need to show a lot of profit. And then I got to pay a lot of taxes. And so my accountant, his job is to make me pay as little as possible, right? That's the accountant's job in their eyes. For every CPA in the country, the typical job is make my client happy, which is not have a giant tax bill. But that screws me and them if they need lending, because the banks that do good loans, right? Think about it. If you're giving somebody money to pay back for more than 2 years, you're going to want to see tax returns. See what the business looks like on an annual view. People want to pay back their loans more than 2 years, 2 or 3 usually, maybe 4 or 5 with a prepay, they can pay back early. By using tax returns to do that, they feel like, well, I got to have a high profit and now I'm paying all this tax. There's something called EBITDA. You've heard of EBITDA?
Earnings before
Yeah,
interest, depreciation.
Yeah. Those certain line items, the interest, the depreciation, the amortization can get added back to that bottom line. So let's take the equipment guy, for example. We take a $100,000 SBA loan, a $100,000 term loan over 12 months because he doesn't have his tax returns for this year.
So term would be the guy calling on the phone.
Yep.
Okay, so he takes that bad deal.
He takes a bad deal, buys the equipment. Then he calls me because he's shopping again for money, and then he doesn't want another bad deal from that guy. I say, okay, well, did you file your 24 taxes yet? He says, no, I didn't. They're on extension. Like most people, it's on extension. Okay, and you bought that equipment last year in 24. Yeah, how much was it? 75,000. Okay, and you were going to depreciate it over 5 years. Now he would have only got 1/5 that number on his D in EBITDA. Using Section 179, he gets 100% of it in year one of its purchase. So he used Section 179 on the filing for his tax return that wasn't done yet. Now he's got a profit of $50,000 because he was at a loss of 25. And now he qualified for the SBA because the product that he actually got that was a bad loan, I self-reported to his Dun & Bradstreet. So now his E-Tran score went up and his business credit was good enough to qualify. Now, why wouldn't that company have self-reported their own loan for his business credit?
I have no idea.
Because if they built the business credit, what happens to the customer? They're going to get a better loan.
He's going to leave them.
You can have that.
This is a very interesting conversation because I think that so many business owners can benefit from it. I'm curious what your typical clientele is. Who are you typically servicing?
The daycare in Minnesota, the painter in Alabama, the trucker in Oklahoma, the salsa manufacturing facility in Connecticut, the real estate company in Florida.
So that was my
place.
segue question of can a real estate somebody that flips houses or buys houses?
Sure.
I'm assuming that they could benefit from your services.
Yeah, I do those all the time. If somebody's looking to, I have a person here on Long Island buying $1 million house, but it's going to be worth $1 million, I should say. Right now, it's only worth $450 or $5. But he's going to put $250,000 into it. It'll be worth $1 million. He's getting 90% loan to value on the $1 million, not the $550. Right, so the house is worth $1 million when he's done. That's the ARV, the AMV, the aftermarket value, is the $1 million. So he's getting 90% of that. That's $900,000 to buy it and renovate it, which is what, $200,000 more than he needed, or $150,000 more than he needed. His construction budget went up. Now he's able to put an in-ground pool, which increased the sale price even further. So there are plenty of benefits in working with us if you're in that industry. The only industry that I've found that, I won't call it an industry, I would call it a stage of life cycle of a business, is when they're selling. If you're going to sell your business, calling me at the finish line to make everything look good, right? Because I get that a lot. People are like, I'm about to sell my business. Can you fix my tax transfer 23 and 24? They weren't done yet. And I want them to look good for the guy who's buying them. That is where I fall and I say, listen, I'm all for customer first, right? And the customer's always right. But what I will not do is help one business owner get out of a business that they're failing in, to make it look, and then make it look like it's
Yeah,
successful for
a
the
rug
next
pull.
guy.
Yeah.
Yeah.
What are you actively doing to inform the customer client about your business and your services? Because I think that I'm just upfront. I had never heard of your industry. Obviously, I've heard of lending, but I have not heard of services like yours.
So no one in the country does CFO, fractional, executive services with lending. It's not heard of because it's not out there. The closest you can get is the company out there that does a business lending marketplace that has a lot of products, and then they buy a software that's QuickBooks like. That's the closest you're going to get to us. And the reason why, again, is because my company right now is break even, not profiting because of the CFOs and the CMOs that I have to pay who are not making me as much as what the lending is, because on the lending, I'm not putting these 10, 12 points in. I'm making deals with the bank where if I hit a certain amount of loan volume, they pay me out more percentages on everybody, but all my clients get the buy rate of what I got the money for. So I don't have to actually increase my buy rates. If I get the money at 120 or 121, that's what my customers are getting too. I'll send you a screenshot to the customer of the offer email that I got from the bank if they wanted to prove that I'm not upselling.
So we talked about the process of your business and how right now it's break even because you're building the clientele, but also because it's you like you explained earlier. What's the next step where it's the tipping point where it becomes profitable?
So for every 25 clients, 30 clients that we'll have, we'll need another executive, right? Somebody else to be the CFO, the CMO for the times that the clients request services. And so I figured it would be about 125 customers, but it's really around 150 that we become profitable. Right now we have about 110 that we service, and some of them are huge huge brand names, people that were one of them. One of the companies that we work with was on the fractional team at Red Bull for their like finance team, and then he broke off and opened his own company. So some of the people that we're the guidance for on the financial side, in my opinion, are coming from people from huge, financial backgrounds, but they don't want that to be what they're focusing on. They want to focus on growing their business.
Now, at the beginning of our conversation, you mentioned that the C-suite, the CFO, the CTO, right? They all stay on for I think you said 3 months, right?
Yeah, you'll get 3 months with that executive as a business owner. So you get financing, the executive's there for 3 months for 4 to 7 hours, and at month 4, you would pay $495 if you want to keep them on.
That was my following question. So essentially, could they just keep them on perpetually for the 495 a month?
$495 a month at month 4 is usually what 90% of people are doing.
But now, can they say month 5 and month 6 and month 7? Can you
They'll,
do
yeah,
it?
they auto renew.
Yeah, I
It's
see.
auto renewal. You cancel whenever, as long as you give 30 days notice. There's no contract.
Mm.
But the benefit of everything that I've done is it attracted people like yourself to hear this. They're like, oh, why don't more people do this? And then when I tell you the answer, you're like, okay, well, more people should know about you. Is usually the thing that you think. I worked with a bakery in Massachusetts that was looking to franchise themselves, and they were working with Kevin Harrington from Shark Tank. And when they started working with me and I funded them and I told them about the services I was providing, and I sat down with them for a month, we got their revenues up by putting privacy policies and terms and conditions on their website so Google could crawl it, put a lead post pixel, set up Google Ads and a CRM. So if they went to their website, now they would figure out the email address for the person who visited, the first name, last name, because the pixel pulls that information down. We increased revenue. And Kevin heard about this. He goes, and how much is he charging you? He said. And the woman told Kevin, nothing for 3 months. Kevin came on board, asked to be a 15% owner of the business, and he's on our board of advisors. And now think of all the people that go to Kevin to invest in their business. Kevin also now sends those people to us. He says, I don't think you're ready for me yet, but I think that Lendefied could help you. And then he sends them to us, and we help them package up and do what they have to do to get them back to Kevin. And I'll say to Kevin or his team, clients, I think, at a point now where you would be able to help them scale.
What's the benefit of going to you versus private lending?
Private lending is different because they're not going to set you up so that you don't need to keep borrowing. That's the main difference, is because private lending still wants you to keep coming back. That's how they make money. My business model is I want you to stop borrowing money and I want you to just start saving money and using it more effectively. And then you're going to want to pay the guy who's giving you this advice and helping you do that on a monthly basis, which pretty much CPAs could be taking my job. That's the problem I fear. I fear CPAs across the country are going to be like, hey, wait. I'll do that for you. That is what I'm thinking. But then I'm realizing CPAs don't want to deal with people. They're not people, right? They're not personable all the time. They'll call you back, but then you got to wait 3 weeks to get your profit loss, or wait a week. We're going to get you a profit loss. We could do a draft return in 24 hours, where your accountant's going to make you wait a month because he's got a lot going on, right? So there's not enough bandwidth.
Even just numerically, or financially, fiscally, I think right now I'm paying $350 a quarter for my account. I talk to him maybe once a quarter when he does my what's it called? My quarterly tax statements and stuff, right? And the quarterly payroll reports and stuff.
And do you have a holding company over your entity, or you own it yourself?
Like I have an S corp.
You have an S corp, but you own the S corp.
Yeah.
There's no parent entity over it.
No.
There you go. So why wouldn't he tell you to do that? Because
I don't even know what you're talking about.
a holding company.
I know what a holding. Yeah. But
yeah.
What's the benefit of that?
So I'm sure you do a lot of things. You don't just do podcasting.
Yeah.
Right? You have your wine business. There's another LLC for that one, I'm sure, right?
There is not. It's actually all under that one umbrella.
Well, why wouldn't he tell you to split them up?
Because I'm not a priority.
Exactly.
These 300 clients, and it's exactly. So the reason I said, so then maybe we need to have a conversation outside of this. But my point of that is so for not that much extra capital, I could have the real dedicated time of your
1 hour strategy calls once a week.
Wow, really?
And then that's the 4 hours. And the reason I say 4 to 7 is because we have a strategy call once a week. The other 3 hours are the things that you're having me do between them.
Sure, exactly. It's a no-brainer. It really is. I don't understand any business that wouldn't benefit from these services, because I've done enough of these. I've talked to so many business owners, and even outside of the podcast, because I just love talking business, right? The problem that everybody has is the fact that they are really good, like you said, really good at their business, but as a business owner, you have to wear every hat. And I think that's where they struggle, is because they have a hard time delegating, or they can't afford to delegate.
Well, a lot of people also can't think up the right commission or payout structure for their people. For instance, I have a counseling company that is licensed therapists, and they're like, Devin, we have to pay these people a salary. And I'm like, yes, but it's per client. And you could pay them less per client if you put bonus incentives for X amount of clients that they have to have in order to get paid more. And you could show them that on this scale, you could make more. Push that out to everybody. Not everyone's going to do more. Some people are going to do less. The average is actually going to be savings for you. Because most people, it's the 80-20 rule. 20% of people will be amazing and go and make more on the scale. The other 80 that are doing just enough to get by, you're going to see that they're doing just enough to get by because they're not meeting the matrix. So I help clients actually come up with other ways, like a landscaping company. Imagine not having to pay all your landscapers. You have some landscapers that are on a per job payout because they could make more money that way. It's not as guaranteed, but they could make more. Yeah, now you got a guy who's like, listen, I need to do 100 jobs this week. Can I work this weekend? I need to get to 150. I need to get to 130 to meet my X.
Yeah, and then you'll have some guys that do extra, but you have the majority of people that just kind of hit that minimum.
And if I did extra, I made more.
Yeah, it's really interesting, man. Another thing that I find in where your services would be beneficial is that so many business owners are really good at their craft, but not at business. And they're a really great carpenter or a really great rug salesman or whatever the case is, but they're not great at actually managing finances. I come from my background is in the music industry, and that's why notoriously musicians got screwed with record labels, is because they would be phenomenal creatives, phenomenal musicians, but then when the money came in, they didn't understand it at all, and then they got screwed. And it's very often the case with business owners. They have a great product, a great service, they do it better than anybody else, but then they get screwed because they're like, oh, I didn't
Well,
realize that.
to feed into that though, so you get a manager, right? And he's supposed to know what he's doing. But a lot of managers don't help you. They screw you because they're not trying to
Oh,
manage
music in the music
the
industry.
music
Yeah,
industry.
exactly.
That's like going to a bad broker.
Yeah.
So a bad manager for your music. The same
Yeah,
thing.
it's the same concept where they're not looking out for your interest, they're looking out for their own. And but even on the just as even as your business grows, to some degree, that's what my mentality, and I think a lot of other business owners might think this way as well, is like I personally want to hire under me people that are better than I am. And I
You want
think
an entrepreneurial mindset.
well, but not only that, like if I'm hiring an editor, I want to when he sends me back the product, I want to say, how did you do that? I don't know how you did that, and it's to some degree like as on the financial side, I want somebody that's like that knows things that I don't know. That when they're talking to some degree, I'm like, hey, can you dumb that down for me? Because that means that they're doing a better job than I can do.
Yes.
And I think that's what you guys absolutely can do.
Yeah, no, absolutely.
What's the next step for you guys?
The next step for us is to make it so that business owners start to feel like they have support when they get out of the ring that they're in, their box, they get out of the ring every day, they go back to their corner. They're not giving themselves their own bottle of water, their own ice pack on their cheek. We're there in the corner telling them where they threw. Business owners throw punches all day super hard, thinking that they're doing a great job because they got back at the end of the day and they're exhausted. And they're like, man, I'm working so hard. I make all this money, but I feel like I don't have any money. That's where we say, yeah, because you're swinging this way. Should be swinging this way. And so the support and guidance, I need them to fail so I can see where they're failing. And so I come in at the moment or the juncture where the business owner feels like, whatever you tell me to do, I'm going to do it because at this point, what I've done is not working. Right? The business owner that's just getting open, he's 6 months in business. He feels like he doesn't want to take any risks yet. He doesn't know what he wants to do yet. I found that business owner, well, working with me, feels like, yeah, I'm just going to keep doing this on my personal credit cards. I need them to have used their personal credit cards and see that that's not the way because you can't get a large $100,000 credit card on your personal because that's not how personal works. Business, you could. You need business credit to do that or high FICO and 2 years in business. But in that first 2 years in business, people usually max out their cards. People have to fail to see that they need me is the problem that I find.
So hypothetically, though, that the new business owner would benefit to go to you.
They would, but
They
they're
don't
not going
totally
to think they
understand it.
need
Yeah.
it yet. That's the problem.
Mm.
People come to me when they're already in the water with a life vest on and they want now a lifeboat.
You mentioned earlier that the business owners, your goal is essentially that the business to get the business owners to the point where they don't need lending and they're actually saving themselves and funding things on themselves. How does that benefit you and your company?
Well, if you never borrow a dollar after your first loan, but in month 4 you said $4.95 a month works, and I do a great job in those first 3 months of paying for myself for the next 7 or 8 months. That way, if you complain, say in month 6, I've had people call me and say, Devin, month 6, guys, the first 3 months, 4 months, 5 months, you guys did so much. Month 6, you guys are what are we doing now? Like everything that we just did is now going to keep happening, and then now you're going to tell me when you need another piece of equipment, when you need more people, what this next step is, because I'm not going to tell you how to grow next. I've done everything to get it to the point that now you can tell me what the next growth direction is you want to go in. But people will start to look to me to tell them what the next thing is they should do in business because well, everything Devin said worked so far. Yes, because you came to me with a vision. You came to me and told me what you wanted this house to look like, and then I built it. Right? Then you tell me at the end, this looks so good. Can you just build the next house for me? Where should I build next? Find the plot. Tell me, find the thing that your business should do next. I'll help find out what that thing is, but I'm not there every day. It's not like I'm the prophet from MSNBC where I go into the factory and I walk with them through the facility and I meet everybody. I do that here for the businesses on the island, absolutely, but I don't have the ability or the bandwidth to do it nationwide. So I count on the business owner to, on those weekly, hourly strategy calls, tell me the honest truth about what's going on. Tell me about the employee that stole last week that you caught, that now you have to fire and replace. Because now that's why you have an Indeed online ad and your budget is 5 times what it should be, right? Why do you need to hire so fast? We've been working together for 3 months. What happened? Well, I just needed to hire. Well, it's not really what happened. Somebody was stealing out of the register. Yeah, it was my cousin and I just didn't want to tell you. It's like, I'm never going to be the guy you have to hide things from. I'm always going to make it so you look as attractive in market to banks as possible. So I think after people work with me for 12 months, they start to feel like, okay, I got it. Devin talks to me once a week, tells me what I should be doing, and then I have to be the one that goes to do it. There's a point in time with a lot of people I find where they start to feel like, okay, Devin could do that for me, and I could, but I don't have the amount of time in that 4 to 7 hours. So then you have to pull from your next month. Now you don't have any hours for August because you used them in July. So in August, you're going to pull from September, and you're going to pull from October. So some people end up using up their hours because they need more. That is where you'll go to the $7.95 a month to get 13 hours.
That's my next
Right?
question. Is there a
So
tiered level?
you can get more hours, but as soon as you need me for 20 hours, you need somebody full time or half time.
Oh, so you're answering all my questions because my follow-up question to that was obviously you want these businesses to succeed, and what happens when they succeed past the level that you're providing? And I mean, it's a blessing for them, but
But what happens is crazy is now you've got a CFO to help run that business, right? What do business owners do when one business is successful?
they open up another business.
Who are they going to call? Not Ghostbusters.
They're gonna call you. It's a beautiful business model, man. It's so fascinating. You did a really, really great job.
It's a
really
lot of cosmic karma that rolls into it, right? You do the right thing by others, you just hope
well,
that
that's kind of exactly what I was saying before, and I think that what so many business owners miss. They miss those. They think that their business is business, as you say, right? For example, there was this whole situation recently in this a local area where like one business was having trouble with their landlord. They got evicted, and immediately all the other businesses in that same industry were like, "Hey, come check out our business. Come, I heard that, and it's like it's interesting because my wife, who has an incredibly kind heart, was like, it's business. They just want, they don't know what's going on in that situation, and they don't know that the guy was, looking for another lease. They don't know it's business." And I'm like, I don't know. I just felt like it could have been done so much differently. Like just the kindness aspect that like, hey, we're so sorry to hear that happened. Come check out our business, but please feel no obligation to stay. Like we don't want the other business owner to like the karma, which you want to call it that, pays I think personally so many dividends in the end, and rather than just a short term, hey, let me get this quick buck.
yes,
And I think
100%.
that so many business owners lack in that area because I don't know if it's fear based that if I don't get this quick buck, there's not going to be one behind the door. But
Well, my son's camp, for example, that he goes to, Camp Kenwell, not to plug it, phenomenal
uh
camp. They give away part of their soccer field to kids with special needs, and then what ends up happening is those parents sign them up for the camp, and the special needs organization doesn't have to pay money for the field. Right? What a win-win for both of those kids. And they also have there's another one, soccer stunts, kids without special needs, kids that are able to function and complete task assignments completely on their own. Those type of programs are also run at that same camp at no charge to that company because they're underprivileged youth. So they're kids that the parents can't afford to put them in a regular league, but they don't have special needs, but they still can't afford it. Howie, the owner of that camp, runs that too on the other side of the field. Those parents sign them up. So, it's a big thing. Business owners across the country that hear this will agree that that's actually how it works.
oh, I don't. I mean, I think that I don't know. I don't see it enough. But in the businesses that you see do it, you see the results. You see, for example, there's a restaurant right around here, constantly donating. Something happens, they donate $500 worth of gift cards. Or they fund when when the pandemic hit, they sent all this food to these hospitals and constantly giving. Their restaurant's constantly packed,
Mm-hmm.
and it's the given you shall receive. It just works. It
Yeah,
really
yeah,
it's a great business
absolutely.
model.
It
But I
is.
think that more businesses can benefit from actually doing it.
Yeah, it takes a lot to jump into cold water sometimes, but once you do it, you feel all right.
Yeah, cold showers, baby.
Yeah,
Every day.
exactly. So just to piggyback on what I said earlier, business owners will usually come to us, and I feel like there's the life vest on already, but it's because they need money tomorrow. They need money in 3 days for payroll. And if business owners would think, all right, I don't need money right now, but I look really good right now. I have money in the bank. I have a lot of deposits. Maybe that's the time for a line of credit to be made active so that now when you do need money, you have the right vehicle to go use it for. So I would say that, the business owners that should come to us might not be in trouble, right? Sure, some come to us when they are. But I would say the right business owners are those that need to borrow money now or inside of the next 12 months. Because then you're going to want to make sure that the business credit's the way it should be. You want to make sure you have an Experian BIN number and all the things that you need.
Hypothetically, could a business come to you outside of lending just for those C-suite services?
They do a lot of the time, but it's from referrals. So businesses that come to us will say, my my buddy told me you're his fractional CFO. I'd love that service for my business. And then I'll say, okay, well, the reason that he got us at no cost is because he got lending. If you're going to have us come in at no lending involvement, then I have to come in and figure out, okay, how much money do you have in the bank? How much money are you willing to spend out of that money to do the things that I want you to do? And I've found that business owners don't always have enough money to do everything they want to do, and also the things that are in my tech stack, the softwares that I recommend. So what I tell people is it's very expensive. If you don't need lending, it's $4,495 on a setup fee. I'm the business owner, and I'm telling you the loophole. Activate a line of credit. Get me for 3 months for free, and you have a line of credit. You don't have to draw on anyway.
I totally understand what you're saying, and I'm assuming that they would, at some point likely use that line because you're going to get their finances in a position to do so, right? What would be a good starting point, like financially? You mentioned that sometimes they don't have enough finances in the account to actually be worth it. Like, what's a good number where they're like, hey,
If you can qualify for Ramp by Visa without me, Ramp by Visa, and you could Google it, minimum qualifications for Ramp by Visa are 6 months in business. Nope. Yeah, sorry, 6 months in business, US based, no sole proprietorships, and you got to have $25,000 in the bank. That's it. If you have $25,000 in the bank and you can qualify at Ramp, then Ramp will give you a line of credit for, say, five. I will use that five with you on the right software to engage people so you have leads that go to your website from the Google ads we're doing. And that traffic that's flowing to your site now goes to a CRM that you're marketing to them from. So you weren't marketing before, now you are. Right? We could start small like that. And that ramps on a net 30 anyway. So you'll see the benefit from what I'm doing before you have to pay them back.
So essentially now you're becoming the CMO, this chief marketing
officer. One of the other executive positions. Yeah. That's actually something that I did for 6 months. I was the chief marketing officer for a company.
So what C-suites do you offer?
It's CMOs, CFOs, and CTOs mostly.
What's the CTO as chief?
Technology.
Which would be what?
People want to post a pixel on their site. They want to build the CRM. They want to build a website. All that.
I see. This has been super interesting. I think it's going to be one of those podcasts that I think people should listen to 2 or 3 times and might need to Google some things on because I think that, again, myself included, business owners are good at what they do, but not necessarily totally understand all the financial sides, which is why they would benefit from a company like yours. So I really appreciate you taking the time and explaining this and dumbing it down for some of the business owners like myself. Yeah. But if you're a business owner, I definitely recommend just giving Devin a call. And I really appreciate you taking the time to come on. So
I appreciate it. Thanks for having me. What I'd like to do also is if somebody does apply to Lendefied from wherever post we'll make this on or QR code we use, I'll give away a free copy of a book that talks a lot about all this. So maybe watch it 2 or 3 times, but maybe also have a copy of the book with a synopsis on the back end, right, where it's maybe 6 pages to summarize all this stuff and have bullets. And I think that might be something that
people wanted to buy this book. Can they buy the book?
It's actually something that I give away to anybody that's declined at my company. So if you're declined, you come to us and apply, and I can't help you. You get a copy of the book because now you're going to know the red flags to look out for the next guy. If somebody's talking about an SBA loan, you've heard of an SBA loan,
mm-hmm.
but they don't say the word E-Tran. You don't know what an E-Tran score is. It's a combination of business and personal FICOs. You need a 155 or higher to get an SBA loan. The guy's trying to make you get an SBA loan, but he's not talking about an E-Tran score. That's a red flag number 1. And if he's talking about an SBA loan, but he's only asking for bank statements, red flag number 2, you hang up. And so it's meant to just help the people
not
get screwed over in the future with somebody with a bad actor.
So it's been an absolute pleasure. It's really interesting to like I was saying, to hear this side of the industry and also to just learn a lot about your industry. And I think that so many business owners could benefit from your services. So like I said, give them a call. If you're a business owner and you think you might be a good fit for this podcast, please consider reaching out, and we'll see you in the next video.